Hello, everyone. Happy New Year, and welcome to our very first Wide World of Options episode in 2026. I'm your host, Mark Benzaquen, and you may have seen my next guest on CNBC, Fox Business News, the Schwab Network, Yahoo Finance. She's all over the news when it comes to talking about options and talking about the markets. And when she's not on TV, she is behind the scenes at stockbrokers.com, where she is the director of investor research. So, ladies and gentlemen, please welcome and wish Happy New Year to Jessica Inskip. Jessica, thank you so much for joining us.
Thank you so much for having me. I cannot believe that we're already in a complete new year. I feel like 2025 just flew by.
Right? Wasn't that crazy? And trust me, the older you get, the faster it goes. So you've got that to look forward to. Sorry to
Very
say.
excited. That's all right.
But speaking of 2025, wow, what a year we had. The markets, right? The all the broad-based indexes, the indices, everything up, double digits. We saw our first $5 trillion company, mind blowing.
Very
Crypto
much so.
AI, right? Continuing to make headlines. Um, with all of that in mind, what I'm wondering is there anything that caught you off guard? Anything that you found surprising that happened in 2025?
Well, I think if we could categorize 2025 with one word, that word would be uncertainty.
Yeah,
And uncertainty goes hand in hand with volatility. So we
right.
certainly saw quite a bit of that. And as you know, volatility means up and down as well. So
Mhm.
businesses couldn't plan. If we can't plan, then we create uncertainty. We can't have valuations and price targets, which creates a lot of opportunity in the options world. But that was the key theme that I saw in 2025 and may even translate to 2026. But it did surprise me that level of uncertainty that came across a lot of fronts. I think we came into the year really excited with an easing Fed. Normally, that is very good for markets. History, of course, is not indicative of future results, but
Correct.
there was so much uncertainty that was brought into that narrative due to the likes of tariffs and fiscal policy that then adjusted into monetary policy that we were trying to digest and still trying to digest as we get into 2026. So that was really the surprise for me was the level of uncertainty. And I even remember talking to my boss early on in the year. I believe it was around March, and a couple of other folks in the analyst world saying, I don't understand. I feel like I can't get anything done. I'm extra busy. And I realized it was the uncertainty. It required an extra level of attention. We had to monitor headlines more than usual, had to monitor Truth Social and all the social media networks because
Right.
that had an that had a big effect on markets. And that was my biggest surprise was the amount of work that also went into understanding the uncertainty and staying on top of it.
Yeah, certainly. And that uncertainty, I don't know that it had a direct correlation necessarily, but certainly an indirect effect on the crazy options volume that we saw. 14
Oh yeah.
billion plus, contracts being cleared, another record for the markets, for the industry as a whole. So obviously, investors, in times of volatility, some people see that as an opportunity, as you had mentioned earlier, for profits. Other people see it as you know what, I'm staying away from this. I'm not even putting my toe in the water. I want to wait until this volatility dies down. Obviously, people are acting on that. Yeah.
Yeah, absolutely. And I think that was another theme of 2025, which the increased retail participation. And I actually love the way that Kevin Devat speaks about
Hmm.
volatility. It's something where he uses this wonderful analogy with fire and Homo sapiens, how initially we were afraid of fire and it was seen as a means of destruction. But once we understand how to utilize fire, it actually helped accelerate human nature and human growth. And it was a key point of our evolution. And I feel the same way about volatility. That's the analogy that he was making. Once you understand how to utilize volatility, it actually can help evolve your trading or take it to that next level. But when we're investing, ultimately you're accepting volatility. You're stepping onto
Yeah.
that investing roller coaster. And I think that goes hand in hand with the retail participation because they are more educated. I noticed they were graduating and getting into more advanced option strategies, even advanced, moving beyond that passive index fund investing and getting more advanced in the stock world. So I think that that actually goes hand in hand, Mark.
Right. And you know, you mentioned Kevin, and I got to tell you, Kevin's a very good friend of OIC. He's a good friend of myself personally. I've got to take him to task. I've never heard that analogy before about
Yeah.
man and fire, and boy, I love it.
It is a
Yeah.
great one. He is a wonderful speaker. I love speaking with Kevin. Great person. Shout out Kevin.
Yeah, he is terrific, and I'll let him know. I'll let him know that we talked about him here for sure. So we talked a little bit about volatility in 2025. You were saying that you might expect to see some of that more in 2026. Anything else on the horizon in 2026 that strikes you as I'm sure this is going to happen, or I'm sure we're going to see this? Obviously, I'm not going to hold you to it. I won't give you a call, 11 months from now and say, you told me this was going to happen and it didn't. But, anything on your mind? What are you expecting to see next or this year, I should say?
Well, so I think the way that I look at the stock market and my analysis overall is threefold when I'm just looking at a high level analysis. And also, my methodology is a little more technical heavy, but I understand that technicals are fundamentally driven, and that's where I bring them in. And that's my personal methodology, meaning most everything is a if this then that statement
Right,
is what I wanted
right.
to preface with.
I got you.
Nonetheless, I digress. So the three pillars that I look at is what's holding up the stock market is the economy, the earnings picture, as well as an easing Fed cycle. So from an analysis perspective, I believe that the stock market moves up on earnings potential, period, and everything else moves into that. But like a stool, we need those three things to prop it up. So that's what I'm assessing. Right now, it is evidenced at the end of the year that there has been some cracks within the economy with an unemployment rate we had in December went up to 4.6%. That was increasing in December. That is cracks perhaps within the economy. So that's a piece of the stool that's becoming a little shaky.
A little
So
shaky, right?
yeah, and then from the growth perspective, that might accelerate because we will have higher tax refunds. That looks like it's going to be on the horizon as we get into tax season. So that could give us a little more spending. A big portion of
Hmm.
GDP is consumer spending. So that could be good, but temporary. So that's what I would be looking for, this if this then that type of thing. And then earnings is actually broadening out but slowly beyond the magnificent seven, and I actually find that very healthy, and that's based off of really the Q3 data. We haven't gotten all of Q4 data for earnings season just yet, and we'll get that in. So the stool is still being held up, and we also have an easing Fed. It's going to be interesting to see how that continues. But as long
Right.
as those three things happen, I do think the market can be held up. We do have that K shaped economy and this bifurcation where the lower income cohort is definitely hurting more, and then the higher income is holding up consumption and consumer spending. And that AI narrative as well is a huge portion of GDP. So I do think there's just a lot to digest. And that's why I wanted to preface that question with if this, then
Right.
that,
I
because
love it.
there is so much to take in to determine where it will go. And it all filters into that stool and what's propping it up.
Right. And again, another great analogy of the stool, those three pillars holding everything up. So I do like that.
Yeah.
Um, we briefly touched on volume, record volume in 2025. You had mentioned the influx of the retail investor.
Yes.
A lot of retail investors, or just a lot of people in general, um, do New Year's resolutions, right? I want to learn this year. I want to, learn how to play guitar. I want to take better I can't think of the word. I want to take better ownership of my
Mm.
investing and my retirement, et cetera, et cetera. And a lot of people, not the guitar part, but the ownership of their retirement, for example, they may say, I want to take a more proactive approach in learning about investing. And that might come to learning about investing with options. All that being said, it's a long way for me to get around to asking you, the people that you talk to that are new to options, that are, just getting into them this year, they want to learn how they options work. Any advice or tips that you generally impart upon these people? Where do you tell them to start? How do you tell them to start? What are your thoughts on that? So basically, here's the question: somebody wants to learn about options. That's their New Year's resolution. Where do you go from there?
All right. If you want to go into 2026 and learn about options trading, and this is your New Year's resolution, here are your steps to success.
Oh, I love
Number
this.
one, foundation. You have to understand before you execute. And this is important because there is a lot of terminology that starts coming into the world of investing, and it accelerates as you get into options. If you understand that terminology and take that time to set that solid foundation, we can be proactive rather than reactive, which
Love
means
it.
understanding exercise and assignment, when that happens, when it is ideal, when to go long, when to go short, what implied volatility is, what a premium is. If you understand all of this, then you can have the confidence to make calculated decisions. We're prepared when something goes wrong. So that's definitely step number one: educate, understand. I know you guys have redone even the options disclosure
Yeah.
document that's more educational. So there's lots of free resources that the OIC provides. There's Tasty Trade has some of my favorite courses. So if you want to go on a course, there's
Hmm.
so many. Also, little slight tangent. For the first time, I actually started talking about options trading on my social media channels.
Now,
And
is that, and I wanted to ask you about that. Is that the
yeah,
market make her? You're finally addressing options. You're at that point now?
not at the podcast, but I did on my social media, and those are getting hundreds of thousands of views. I actually held off for it. It's one of my specialties is options trading and teaching it. But because it's complex and not for everyone, I wanted to have care bringing it to social media and establish the foundation of the market as well. So,
Excellent.
assuming this is your New Year's resolution, you have the foundation of the market. We are leveling up with options trading. But what I found interesting, and this leads on to number two, and that understanding, we understand the terminology. Now you have to take the time to understand your risk tolerance and your style of options trading and ideal environments. And that will help understand strategy. And then, of course, an option is a derivative of an underlying security. I think it's still important to have a sentiment on the underlying security that you're trading in
Right.
order to deploy that strategy properly.
Right. Excellent. I love that. And a great, again, I love how you number everything. First, you look at this, second, you look at that, easy steps to follow. Wonderful. Thank you for that. Are you a New Year's resolution type of person? Do you say, come December every year that, all right, January, I want to learn whatever. Do you make New Year's resolutions? And if so, if you're that kind of person, would you mind sharing some of those with us?
Sure, I do. I actually do a couple of different ways. I'm one of those types of people that try. I have seven different to-do lists, as in I try different methods. So the one I want to deploy this year, we actually started it on the podcast. And the podcast, we took a break for the second half of the year, so we're going to bring it back. I like to do quarterly planning because
Okay.
we look at the market quarterly. We have our high level goals we could start as our New Year resolutions, but I like to do it with a bingo card because it makes it fun. So I'll put things that I would like to do for that quarter that are at least measurable, or that SMART goal type of format, on my bingo
Hmm.
card. I have not made my bingo card just yet, but things that are top of mind that I'm happy to share with you. I have been doing a lot on the repo market. So
Okay.
I want to finish my content on explaining the repo market, the Fed deep dive, and a lot with the podcast. Personally, I like to focus goals on creating habits because then they become consistent and a part of your lifestyle. As I
Right.
get to the tail end of my 30s, a lot of that has been health related, as I realize that that consistency is very, very important. So, my biggest one is a consistent health routine. I want to make sure that I work out at least 3 times a week. I know that's so generic, but that is my New Year's resolution that I want to make sure I do. And then, top of my list, I have a 14-year-old son. He is going to be 15 in April, which is insane to me. Do you know he's 6 foot
And then,
one too? He
and
towers
is
over
he,
me.
and he's going to be getting his driver's permit pretty soon.
He will, yes. So
That's
spending
frightening, by the way.
it is so frightening. So the top New Year's resolution for me to make sure that I spend time with him before he doesn't want to spend time with me and gets to
Excellent.
that
I love
time
that.
frame.
I love that. Well, let me transition into something, and it might help you spend some time with him a little bit more. There's something that
Sure.
I want to do in 2026, and I'm sure some of the other podcasts you've guested on, I'm sure they've done something similar. Not necessarily a lightning round, but I just want to ask you some random questions to get to know you a little bit better as a person, as opposed to a financial person
Okay.
necessarily. So I'm going to ask you some random questions. Feel free to pass if they're too personal or if they're just too weird. But let's start off with this. What is your most useless skill?
Oh, my most useless skill.
Useless skill, right?
Oh, that's a hard one. Um,
Or how about this? What is the one skill that you don't possess but you wish you did? Either or. I
uh,
like the useless better, but I can understand that off the top of your head that might be hard to come up with.
I mean, I would love the ability to go back in time, but that's
All
not a
right.
it's a superpower. My I wouldn't call it a useless skill, and I apply it, but maybe a not so used skill. I have a creative side, and I actually can draw really, really well. But
Okay. Great.
I that's why my PowerPoints look so nice, and I have these great visuals that I pair
Love
on
it.
my social media. But I don't practice art or anything like that. So I wouldn't say it's a useless skill,
Okay.
but maybe an underutilized
Yeah,
skill.
my wife is a professional designer, and I
Ah,
wish that she would do more personal art, because what she does for websites and corporate design is it's unparalleled. It's spectacular. How about this? Your phone. What's the most used app on your phone right now?
oh, Mark. So I just discovered
Uh-oh.
iPhone organization.
Ooh, okay, I might need that.
I will send you screenshots. It's actually impeccable. So, my most used app, since I've literally just did this and it's transformed my life, you can have widgets. So, I actually have a page dedicated to finance, a page dedicated to content creation, pages to certain things, and it has absolutely streamlined my productivity, and I love it. My most used app is actually investing.com, I want to
Oh,
say. I
okay.
downloaded investing.com when I was working on the active trader desk at Fidelity Investments back in, I think that was 2012. Yes. And it was
Wow.
the only app that offered streaming futures for free.
Hmm.
And since 2012, I still have it on my phone. It has a widget where I can have a watch list, but I get notifications of economic events, headlines, and anything that happens with the market. I can look at that right away. At 10 p.m. on the dot on a Sunday night, I get an insight into what's happening with the futures market. I know exactly what's happening with Asia. The second CPI comes out, there's a notification on my phone, and it's not it investing.com already filters through the noise, so it's less noise.
Terrific.
That is moving more to AI related tools. However, that one I've used for years.
Excellent. Okay, I'll have to take a look at that myself. Here's one. So this is how you can spend more time with your son.
Okay.
Karaoke. What's your go-to song?
So I love All Too Well, the 10-minute version by Taylor Swift. So I
All
choose a
right.
10-minute song by.
All right. I love it. So your son's just going to be sitting there and he's like, Mom, seriously, Taylor Swift? Enough.
Yeah, yes.
I love
Actually,
it.
when I drop him off at school and he is in a mood, I tell him that I'll blast Taylor Swift. So
I love it. Speaking of Taylor Swift, and this may not apply, but celebrities. Who's your first celebrity crush?
it was Nick Carter from the Backstreet
Oh,
Boys.
oh, come on.
That was it. That was my first
All
celebrity
right.
crush.
All right. Nick Carter, Backstreet Boys. Last question.
Yeah.
And this is one that I'm most interested in hearing. What
Okay.
is the worst advice you've ever received?
Oh. Hmm. Uh, someone and an executive told me that because I was a female, I had to pay my dues and work harder, and that I should also, that's going to happen with my team as well. And I found that the worst advice because it stops the,
It almost makes it okay. It says
yeah,
that this is how it is, so just deal with it.
it continues the cycle.
Exactly.
And
Yes.
so the way to stop that is too abrupt. So I took that very bad advice of, I suppose, the to bring it more high level and apply it more broadly is, this is how it is the
Yeah.
worst advice that you could ever receive.
And deal
Challenge,
with it.
yeah, and challenging concepts, rethinking concepts is what makes us different and is how we progress. It's how we can come up
Hmm.
with really fun analogies and focus on what we love. So challenging the norms is definitely
Okay.
what you should do.
Excellent.
Worst advice, follow the norms.
Right. No, I love that. Excellent. Thank you so much for that. And thank you for joining me. I really appreciate, you helping kick off 2026. We've got a brand new year, wide world of options, brand new year in the markets, a lot to look forward to. Certainly
We
thank you for
do.
your time. Thank you so much.
My pleasure. Thank you for having me.
Well, ladies and gentlemen, that's going to do it for our episode today of Wide World of Options. Again, thank you. A special thanks to Jessica Inskip of stockbrokers.com. Thank you to all of you, ladies and gentlemen, that are joining us and for your continued support throughout 2025 and into 2026. If you're interested in our OIC webinar program, go to our website, optionseducation.org. See what we have on in plan for Q1. So take a look at our schedule of webinars. The content occurs on the second and third Wednesday of each month. We also have a all new OIC office hours, Ask Us Almost Anything. That is going to be the second and third Thursday of each month. And then additionally, any options related questions that you might have, shoot us an email, options@theocc.com. That's our investor education email address. So, Jessica, to you, and ladies and gentlemen, to you joining us, happy and healthy and prosperous new year in 2026. And we'll see you again all very soon. Thank you for joining us.